Good day, ladies and gentlemen, and welcome to the IRS webinar, Overview of Requirements for Charitable Hospitals under the ACA Section 501R. At this time, it is my pleasure to turn the floor over to your host, Cheryl Teser. Ma'am, the floor is yours.
Thank you. Good afternoon, everyone, and welcome to the webinar today. My name is Cheryl Teser, and I'm a Senior Program Analyst with the IRS. Today, we will provide an overview of the Patient Protection and Affordable Care Act that was enacted on March 23, 2010. The Patient Protection and Affordable Care Act is commonly referred to as the Affordable Care Act, or ACA. While there are many different aspects to the Affordable Care Act, we will specifically be covering Section 501R, which imposes additional requirements on tax-exempt charitable hospital organizations. However, it is important to remember that Section 501R does not affect the general requirements for tax exemption that charitable hospitals are required to meet under Section 501c3 and Rev. Ruling 69-545. Section 501R1 imposes 4 additional requirements that hospital organizations must satisfy to be described in Section 501c3. Specifically, Section 501R1 requires a hospital organization to meet 4 requirements. Number 1, the Community Health Needs Assessment requirements described in Section 501R3. Second, the Financial Assistance Policy and Emergency Medical Care Policy requirements described in Section 501R4. Third, the Limitation on Charges requirements described in Section 501R5. And finally, the billing and collection requirements described in Section 501R6. As I previously mentioned, today's presentation will provide only an overview of Section 501R. There will be a series of subsequent presentations over the next several months that will go into greater detail with respect to the specific requirements covered in Section 501R. And now I would like you to meet my co-presenter today.
Hello, Cheryl. This is Geoff Campbell. I am a tax law specialist with the Internal Revenue Service, and it's a pleasure to do this presentation with you today, Cheryl.
Thanks, Geoff. The pleasure is mine, and I'll turn it over to you.
All right. So first, let's take a look at the organizational and operational tests imposed on 501c3 organizations. IRC Section 501A generally provides that organizations that are described in Section 501c3 are exempt from federal income tax. IRC Section 501c3 describes many different types of organizations, including charitable, religious, scientific, educational, and several others. While actually encompassing many different types of organizations, 501c3 organizations are often referred to generically as charitable organizations. In addition to being a type of organization that is specifically enumerated within IRC Section 501c3, these organizations must also have the following characteristics. First, no part of their net earnings is allowed to inure to the benefit of any private shareholder or individual. Second, no substantial part of their activities can consist of carrying on propaganda or otherwise attempting to influence legislation. And third, the organization should not participate in or intervene in any political campaign on behalf of or in opposition to any candidate for public office. Charitable hospital organizations typically apply for and receive recognition from the IRS as being exempt from taxation as organizations that are described in Section 501c3. The regulations under 501c3 outline the various exemption requirements and state that an organization must meet both an organizational test and an operational test to qualify for exemption under Section 501c3. Cheryl, can you explain what the organizational test is?
Certainly. Treasury Reg Section 1.501C3-1B provides that in order to be exempt as an organization described in Section 501c3, An organization must be organized exclusively for one or more exempt purposes. In general, an organization is organized exclusively for one or more exempt purposes only if its organizational documents meet certain requirements. First, the organizational documents must limit the purposes of such organization to one or more exempt purposes. Next, they must not expressly empower the organization to engage other than as an insubstantial part of its activities in activities which in themselves are not in furtherance of one or more exempt purposes. Third, they must not expressly empower the organization to devote more than an insubstantial amount of its activities to attempting to influence legislation, participate or intervene in any political campaign on behalf of or in opposition to any candidate for public office, and engage in activities which characterize it as an action organization. Finally, the organizational documents must permanently dedicate the organization's assets to charitable purposes upon dissolution. Now let's take a look at the second part of this, the operational test. Geoff?
Thanks, Cheryl. Treasury Regulation Section 1.501c3-1c defines the operational test for exemption under Section 501c3 as consisting of four broad categories, involving first, the requirement to operate exclusively for exempt purposes; second, the prohibition against inurement; third, the prohibition against becoming an action organization; and fourth, the prohibition against substantial private benefit. An organization will be regarded as operated exclusively for one or more exempt purposes if it engages primarily in activities that accomplish one or more exempt purposes as specified in Section 501c3. In the context of operating a tax-exempt hospital, it's not enough for a hospital to state that it operates exclusively to promote health. Rather, a hospital must demonstrate that it operates to promote the health of a class of persons that is broad enough to benefit the community. This is known as the Community Benefit Standard, and we will be discussing the Community Benefit Standard in just a few minutes. In addition, Section 501c3 prohibits an organization from distributing its net earnings to any private shareholder or individual. As defined under Treasury Regulation 1.501a-1c, a private shareholder or individual is a person or persons having a personal and private interest in the activities of the organization. Hospitals must also comply with the statutory requirements that prohibit an organization from qualifying for Section 501c3 if a substantial part of the organization's activities consist of carrying on propaganda or otherwise attempting to influence legislation, or if the organization engages in any political campaign intervention. Finally, the regulations state that an organization is not organized or operated exclusively for exempt purposes unless it serves a public rather than a private interest. And now, as I said a moment ago, we're going to talk about the Community Benefit Standard, and Cheryl is going to get us started with that. Cheryl?
Thanks, Geoff. The Community Benefit Standard has been in place since 1969. It is a test used by the Internal Revenue Service for determining whether a hospital is organized and operated for the charitable purpose of promoting health. The Community Benefit Standard is set forth in Revenue Ruling 69-545. Section 501c3 provides exempt status for organizations that are, in general, religious, charitable, scientific, literary, or educational. The promotion of health is not a specifically enumerated purpose within Section 501c3. However, it is one of the purposes in the general law of charity that is deemed to be beneficial to the community as a whole, even though the class of beneficiaries eligible to receive a direct benefit from its activities does not necessarily include all members of the community. Therefore, in order to qualify as an organization described in Section 501c3, a hospital must demonstrate that it provides benefits to a class of persons that is broad enough to benefit the community and is operated to serve a public rather than a private interest. We also want to mention that Rev Ruling 69-545 modified Rev Ruling 56-185. Revenue Ruling 56-185 set forth more restrictive requirements for exemption of hospitals under Section 501c3. Those requirements included patient care without charge or at rates below cost. Though a hospital is no longer required to operate under those restrictions, doing so continues to be a significant factor, indicating that the hospital is operated for the benefit of the community. Now, Geoff is going to talk a bit about the specifics of Rev Ruling 69-545.
Thank you, Cheryl. To be organized and operated for the charitable purpose of promoting health, a hospital must meet the community benefit standard in Revenue Ruling 69-545. The ruling sets forth the following factors which, taken together, demonstrate community benefit. First, operating an emergency room open to all, regardless of ability to pay. Second, maintaining a board of directors drawn from the community. Third, maintaining an open medical staff policy. Fourth, providing hospital care for all patients able to pay, including those who pay their bills through public programs such as Medicaid and Medicare. Fifth, using surplus funds to improve facilities, equipment, and patient care. And lastly, using surplus funds to advance medical training, education, and research. Although no one factor is determinative in considering whether a nonprofit hospital meets the community benefit standard, the service will weigh all the relevant facts and circumstances in evaluating these factors. Additional factors such as whether a hospital provides financial assistance to those not able to pay are relevant in determining whether the hospital is providing a benefit to the community. Now, let's now take a look at each of these factors under the community benefit standard, and Cheryl will start us off with that. Cheryl?
Generally, operating a full-time emergency room open to everyone, regardless of ability to pay, is a factor weighing heavily in favor of a finding that the hospital satisfies the community benefit standard. A hospital that does not operate a full-time emergency room may not be fulfilling the community's need for emergency health care and therefore may not be operating for the benefit of the community. Operation of an emergency room that is not open to everyone, regardless of ability to pay, also indicates that the hospital is not operating for the benefit of the community since a significant segment of the community is not being served. However, as described in Rev Ruling 83-157, if a state health planning agency has made a determination that additional emergency facilities would be unnecessary and duplicative, or if the hospital offers medical care limited to special conditions unlikely to necessitate emergency care, such as eye or cancer hospitals, then the fact that a hospital organization does not operate an emergency room will not, by itself, disqualify it as a 501c3 organization.
Another factor, members of the hospital medical or administrative staff or their representatives may serve on a governing body of the hospital, also composed of members of the community. However, these individuals should not control the governing body. Control of the governing body by the members of the hospital medical or administrative staff or their representatives indicates that the hospital may be serving private interests rather than public interests, and thus not providing a community benefit. In addition, members of the governing body who are also members or representatives of the medical or administrative staff should not participate in the decision-making process where questions of inurement or private benefit to members of the medical or administrative staff might arise, particularly such as compensation. However, other areas that are within the particular expertise of the members of the medical staff, such as appropriate medical treatment and medical research or education, may be subject to their unrestricted control. Cheryl, can you tell us about some of the other factors in the community benefit standard?
Absolutely. The requirement of an open medical staff was originally intended to take care of the problem of doctor-owned hospitals seeking exemption while limiting admissions to their own patients. Today, this is less likely to be a problem since hospitals want as many physicians as possible associated with them in order to increase paying admissions. However, it remains a factor because of the unique relationship that physicians have with hospitals. A hospital that restricts its medical staff privileges to a limited group of physicians is likely to be operating for the private benefit of the staff physicians rather than for the public interest. By the same token, the hospital does not need to grant medical staff privileges to every physician that requests them to be considered operating for the benefit of the community. Geoff?
In general, a hospital is required to admit patients with the ability to pay for non-emergency services either by themselves or through health insurance to the extent that qualified facilities are available. A hospital that restricts admissions to patients of staff members is operating for the benefit of its staff members and not for the benefit of the community as a whole. Therefore, once a determination is made that a particular patient is covered by health insurance, either a governmental program or otherwise has sufficient resources to pay for the health care him or herself, and the hospital has the available space and can provide the appropriate medical services, then at that point the patient should be admitted to the hospital in a non-discriminatory manner. Otherwise, this is strong evidence that the hospital is not operating for the benefit of the community.
As noted in Rev Ruling 69-545, the fact that a hospital operates at an annual surplus of receipts over disbursements does not preclude its exemption. By using its surplus funds to improve the quality of patient care, facilities, and equipment, the hospital is operating in furtherance of its exempt purposes. Additionally, by using surplus funds to advance its medical training, education, and research programs, a hospital is promoting the health of the community. The provision of free or subsidized care to the indigent is a significant indicator to the courts and the service that a hospital promotes health for the benefit of the community. In Rev Ruling 69-545, the service ruled that a hospital which operated a full-time emergency room did not deny emergency care to those who could not afford to pay and met certain other requirements qualified for exemption. These charitable factors outweighed the fact that the hospital ordinarily limited admissions to individuals who could afford to pay for their hospitalization and referred indigent patients requiring hospitalization to another hospital in the community that served indigent patients. By contrast, Rev Ruling 69-545 denied exemption to a hospital that maintained an emergency room on a relatively inactive basis, primarily for the convenience of its paying patients, and instructed ambulance services to take emergency cases to other area hospitals. Now that we've taken a pretty good look at the community benefit standard, let's talk about Section 501R. Geoff will get us started.
Thanks, Cheryl. As we have previously mentioned, Section 501R1 imposes 4 additional requirements that hospital organizations described in Section 501R2 must satisfy to be described in Section 501C3. Specifically, Section 501R1 requires a hospital organization to meet the following requirements. First, the Community Health Needs Assessment requirement under Section 501R3, the financial assistance and emergency medical care policy requirements in Section 501R4, the limitation on charges requirements under 501R6, and the billing and collection requirements described in Section 501R6. For this session today, we'll be giving you a brief overview of each of the 4 additional requirements. In subsequent sessions, we will go over these requirements in much greater detail. First off, it's important to be aware of the effective dates of the statute. Section 501R, with the exception of Section 501R3, the Community Health Needs Assessment requirements, Section 501R applies to taxable years beginning after March 23, 2010, which was the date of enactment of the Affordable Care Act. The Community Health Needs Assessment requirements of Section 501R3 are effective for taxable years beginning after March 23, 2012. And Cheryl, what about the effective dates of the regulations?
Thanks, Geoff. With respect to the effective date of the regulations under Section 501R, the final regulations issued December 29, 2014, apply to a hospital facility's taxable years beginning after December 29, 2015. This date gave all hospital facilities at least a year to come into compliance with the final regulations. For taxable years beginning on or before December 29, 2015, the final regulations provide that a hospital facility may rely on a reasonable good faith interpretation of Section 501R. A hospital facility will be deemed to have operated in accordance with a reasonable good faith interpretation of Section 501R if it has complied with the provisions of the 2012 and/or 2013 proposed regulations. Let's take a look at Section 501R2 and the definition of a hospital organization. Geoff will cover that.
The final regulations define hospital organization as an organization recognized or seeking to be recognized as described in Section 501c3 that operates one or more hospital facilities. The final regulations go on to define hospital facility as a facility that is required by a state to be licensed, registered, or similarly recognized as a hospital. Section 501R applies to hospital organizations on a facility-by-facility basis. Accordingly, if a hospital organization operates more than one hospital facility, the organization is required to meet the additional requirements of Section 501R separately with respect to each hospital facility. The final regulations clarify that a hospital facility consisting of multiple buildings that operate under a single state license is considered a single hospital facility. We want to take a moment here and briefly discuss government hospitals. Since Section 501R has no exceptions for government hospital organizations, the final regulations require that the Section 501R requirements are to be met by all hospital organizations that are or seek to be recognized as described in Section 501c3, including those that are government hospital organizations. These organizations are commonly referred to under tax law as holding dual status, since they're both instrumentalities of a state or local government and also hold tax-exempt status as an organization described under Section 501c3. However, government entities, including hospital organizations that have previously been recognized as described in Section 501c3, but do not wish to comply with the requirements of 501R, may submit a request to voluntarily terminate their Section 501c3 status as described in Section 7.414 of Rev Proc 2016-4. And with that, Cheryl is going to talk a little bit about what it means to operate a hospital facility. Cheryl?
Thanks, Geoff. The final regulations generally provide that an organization is considered as operating a hospital facility if it is the sole member or owner of a disregarded entity for federal tax purposes that itself operates the hospital facility, or if it owns a capital or profits interest in an entity treated as a partnership for federal tax purposes that operates the hospital facility. These entities are known as substantially related entities in the final regulations. The final regulations clarify that an organization is considered to own a capital or profits interest in an entity treated as a partnership for federal tax purposes if it owns such an interest directly or indirectly through one or more lower-tier entities that are treated as partnerships for federal tax purposes. However, a hospital organization is not considered as operating a hospital facility despite owning a capital or profits interest in an entity if the hospital organization treats the operation of the hospital facility, including the facility's provision of medical care, as an unrelated trade or business described in Section 513. This also applies if the hospital organization entered into a partnership agreement described in Section 1.501R-1B22(2B) before March 23, 2010, and otherwise meets the requirements of that section.
The final regulations also clarify that a hospital organization is not required to meet the requirements of Section 501R with respect to any hospital facility it is not operating within the meaning of that defined term. In addition, a hospital organization is not required to meet the requirements of Section 501R with respect to the operation of a facility that is not a hospital facility because it is not required to be licensed, registered, or similarly recognized as a hospital by its state. And with that, let's take a closer look at each of the 4 specific requirements under Section 501R, and Cheryl will kick us off. Cheryl?
Thanks, Geoff. As we previously mentioned, we do want to make sure you understand that we'll be going into much more detail with respect to the 4 additional requirements under Section 501R in subsequent presentations that will be delivered over the next several months. Our purpose today is to provide a brief overview of the 4 requirements. The first requirement is Section 501R3. Section 501R3 requires a hospital organization to conduct a community health needs assessment, or as we will be referring to it as a CHNA, every 3 years, and to adopt an implementation strategy to meet the community health needs identified through the assessment. Geoff, what does a China have to do?
A China or a CHNA must do 2 things. First, it must take into account input from persons who represent the broad interests of the community served by the hospital facility, including those with special knowledge of or expertise in public health. And second, it must be made widely available to the public, which means it must be made available in general on the hospital organization's website, as well as in hard copy available upon request. Consistent with Section 501R3A, the final regulations provide that a hospital organization meets the requirements of Section 501R3 in any taxable year with respect to a hospital facility it operates, only if the hospital facility has conducted a CHNA in that taxable year or in either of the 2 immediately preceding taxable years. In other words, a CHNA must be conducted once during any given 3-year tax period that starts with the first tax year beginning after March 23, 2012. For example, a hospital organization with a tax year that begins on April 1, 2012 must have conducted its first CHNA by March 31, 2013. Accordingly, the hospital organization meets the requirements of Section 501R3 with respect to its 2012 taxable year and would not be required to conduct another CHNA until 2015. In addition, an authorized body of the hospital facility must adopt an implementation strategy indicating how it plans to meet the community health needs identified through the CHNA. Also, if there are any needs that are not to be addressed, then the implementation strategy has to explain why those needs are not going to be addressed. Cheryl, can you tell us what is required under Section 501R4?
Thanks, Geoff. I'd be happy to. Section 501R4 requires a hospital organization to establish a financial assistance policy, or as we call it, a FAP, and a policy relating to emergency medical care. Specifically, Section 501R4A requires a hospital organization to have a written FAP. Section 501R4B requires a hospital organization to have a written policy requiring the organization to provide, without discrimination, care for emergency medical conditions to individuals regardless of their eligibility under the FAP. Let's take a closer look at the FAP requirements. As we mentioned, Section 501R4A requires a hospital organization to have the written FAP. The written FAP has to include a few items. First, it must contain eligibility criteria for financial assistance and whether such assistance includes free or discounted care. Next, it must include the basis for calculating amounts charged to patients. In addition, it must discuss the method for applying for financial assistance. In the case of an organization that does not have a separate billings and collection policy, it should describe the actions the organization may take in the event of non-payment, including collections action and reporting to credit agencies. And finally, it should include measures to widely publicize the policy within the community to be served by the organization. That covers 501R4A. Now, Geoff will talk about 501R4B.
Thank you, Cheryl. To satisfy the requirements of Section 501R4B, the final regulations provide that a hospital facility must establish a written policy to provide, without discrimination, care for emergency medical conditions to individuals, regardless of whether or not they are eligible under the financial assistance policy. In addition, the final regulations provide that a hospital facility's emergency care policy will not meet the requirements of Section 501R4B unless it prohibits the hospital facility from engaging in actions that discourage individuals from seeking emergency medical care in the first place. So with that, let's move on to Section 501R5. Cheryl?
Section 501R5A requires a hospital organization to limit amounts charged for emergency or other medically necessary care that is provided to individuals eligible for assistance under the organization's FAP to not more than the amounts generally billed to individuals who have insurance covering the same kind of care. Section 501R5B generally prohibits the use of gross charges. To reiterate, the final regulations provide that a hospital organization meets the requirements of Section 501R5 only if the hospital facility limits the amounts charged for any emergency or other medically necessary care to a FAP-eligible individual to not more than the amount generally billed to individuals who have insurance covering the same type of care. The final regulations also require a hospital facility to limit the amounts charged to a FAP-eligible individual for all other medical care covered under the FAP to less than the gross charges for that care. Geoff, can you talk about the methods to determine amounts generally billed?
Yes, I can. Thank you. The final regulations provide two methods for hospitals to use to determine amounts generally billed. The first method is a look-back method based on actual past claims paid to the hospital facility by either Medicare fee-for-service alone or Medicare fee-for-service together with all private health insurers paying claims to the hospital facility, or Medicaid, either alone or in combination with the previously described insurers. This includes any associated portions of these claims, such as co-pays paid by Medicare beneficiaries or by insured individuals. The second method is prospective in that it requires the hospital facility to estimate the amount that it would be paid by Medicare or Medicaid and the beneficiary for the emergency or other medically necessary care at issue if the individual were a Medicare fee-for-service or Medicaid beneficiary. The term Medicare fee-for-service includes only health insurance available under Medicare Parts A and B of Title 18 of the Social Security Act, and not health insurance plans administered under Medicare Advantage. The term Medicaid means any medical assistance program administered by the state in which the hospital facility is licensed in accordance with Title 19 of the Social Security Act, including programs in which such medical assistance is provided through a contract between the state and a Medicaid managed care organization or a prepaid inpatient health plan. That wraps up our brief overview of R5, and that leaves 501R6 remaining. Cheryl, you want to get us started on 501R6?
Certainly. Section 501R6 requires a hospital organization to make reasonable efforts to determine whether the individual is eligible for assistance under the hospital organization's FAP before engaging in extraordinary collection actions, or as we will refer to them, ECAs, against that individual. Consistent with the statute, the final regulations provide that a hospital organization meets the requirements of Section 501R6 only if the hospital facility does not engage in ECAs against an individual to obtain payment for care before making reasonable efforts to determine whether the individual is FAP eligible for the care. For these purposes, a hospital facility will also be considered to have engaged in ECAs against an individual to obtain payment for care if the hospital facility engages in such ECAs against any other individual who has accepted or is required to accept responsibility for the first individual's hospital bill for the care. Geoff, can you tell us a little more about ECAs?
Yes, I can. The final regulations provide that the hospital facility will be deemed to have engaged in an ECA against the individual to obtain payment for the care if any purchaser of the debt, any debt collection agency, or other party to which the hospital facility has referred the debt or any substantially related entity has engaged in such an ECA. Furthermore, the final regulations clarify that the hospital facility may be deemed to have taken one or more steps necessary to have made reasonable efforts to determine whether the individual is eligible for financial assistance through any of these same parties. Accordingly, the final regulations hold hospital facilities accountable for the ECAs of debt collection agencies, debt buyers, substantially related entities, anyone else to whom they refer or sell the patient's debt. Cheryl?
Section 6033B sets out numerous items that certain organizations described in Section 501c3 must furnish on its annual information return. Reporting requirements specifically related to hospital organizations subject to 501R are set out in Section 6033B15 and include several requirements. First, a description of how the organization is addressing the needs identified in each CHNA conducted under Section 501R3. It must also provide a description of any needs that are not being addressed, as well as the reasons why they are not being addressed, and finally, the audited financial statements of the organization. Now, Geoff will talk about the Form 990 and Schedule H.
Form 990 is used by tax-exempt organizations, including tax-exempt hospitals, to provide the IRS with the information required by IRC Section 6033. An organization that operates one or more hospital facilities must complete and attach Schedule H to its Form 990. If a hospital organization is not required to file Form 990, for example, if it's a governmental or dual status entity, but it chooses to do so, it must file a complete return and provide all of the information requested, including Schedule H and any other required schedules. Hospital organizations use Schedule H to provide information on the activities and policies of and community benefit provided by their hospital facilities and other non-hospital health care facilities that they operated during the tax year. For purposes of Schedule H, a hospital facility is a facility that is required by a state to be licensed, registered, or similarly recognized as a hospital. A hospital organization that operates multiple hospital facilities must submit separate Schedule H's for each facility. And now Cheryl's going to give us a little bit more detail in terms of what hospitals must report and include with their Form 990. Cheryl?
Thanks, Geoff. Section 6033B15B requires a hospital organization on an annual basis to describe how it addresses community health needs identified in its most recent CHNA and to provide audited financial statements. Specifically, Section 1.6033-2 of the regulations requires a hospital organization to provide on its annual information return a number of items. Number one, a copy of its audited financial statement for the taxable year. Two, a copy of its most recently adopted implementation strategy within the meaning of Section 1.501R-3C, or the URL of each web page where it has made the implementation strategy widely available. Third, for each hospital facility it operates, a description of the actions taken during the tax year to address the significant health needs identified through its most recently conducted CHNA. If no actions were taken with respect to one or more of these health needs, the reason why no actions were taken must also be addressed. And finally, the amount of any excise tax imposed on the organization under Section 4959 during the taxable year for failures under 501R that we'll discuss in a moment. Hospital organizations report information on Schedule H concerning community health needs assessments in Part 5, Section B, lines 1 through 12, in Part 5, Section C, and in Part 6. Geoff, can you talk about reporting for government hospitals?
Yes, let's get back a little bit to the unique situation of government hospitals. A government hospital with dual status as a 501c3 organization, other than a supporting organization described in Section 509A3, is not required to file a Form 990 under Revenue Procedure 9548. Because government hospital organizations are relieved from the annual filing requirements under Section 6033, they're also relieved from any new reporting requirements imposed by the ACA on hospital organizations under Section 6033. This includes the requirement to attach one or more implementation strategies to a Form 990 under 6033 B10D and B15, as Cheryl just mentioned. However, to be treated as described in Section 501c3, a government hospital organization must still meet all of the Section 501R requirements that do not involve disclosure on or with the Form 990, including making their CHNA reports and financial assistance policies widely available on a website. Now, switching gears somewhat, Cheryl, could you talk a little bit about what happens with respect to failures to satisfy Section 501R?
Absolutely, Geoff. Thank you. The final regulations in Section 1.501R2 are called failures to satisfy Section 501R. Treasury Reg Section 1.501R-2A provides that, except as otherwise provided in paragraph B regarding minor errors and omissions, and in paragraph C regarding excusable failures that are neither willful nor egregious, a hospital facility failing to meet one or more of the requirements of Section 501R may have its Section 501c3 status revoked as of the first day of the taxable year in which the failure occurs. Failure to meet any of these requirements may result in one or more of the following actions: correction and or disclosure of any discovered failures and providing the appropriate level of disclosure on Form 990, imposition of a $50,000 excise tax for each hospital facility within the hospital organization that fails to perform a timely CHNA and subsequently adopt an implementation strategy, imposition of a tax on each non-compliant hospital facility's income in a multi-facility hospital organization, or revocation of tax-exempt status as an organization described in Section 501c3, which may, in certain circumstances, affect the tax-exempt status of any bond issue for the organization by a state or local government.
Anything involving potential revocation obviously deals with facts and circumstances, and before analyzing the facts and circumstances to determine whether an organization continues to be described in Section 501c3 in the case of a failure to meet the requirements of 501R, it must first be determined that neither of the following has occurred. First, minor omissions and errors that were either inadvertent or due to reasonable cause are not considered to be a failure to meet a requirement of Section 501R. That's true, however, only if the hospital facility makes correction as promptly after discovery as is reasonable, given the nature of that omission or error. Second, excusable failures that are neither willful nor egregious, but again, only if the hospital facility corrects and discloses the failure in accordance with Revenue Procedure 2015-21. Cheryl, can you talk a little bit more about the facts and circumstances that the IRS considers in this respect? I know there are quite a few of them.
There certainly are. The final regulations state that when determining whether to continue to recognize the Section 501c3 status of a hospital organization that fails to meet one or more of the requirements of Section 501R, the Commissioner will consider all relevant facts and circumstances, which include but are not limited to the following. First, has the organization previously failed to meet the requirements of Section 501R, and if so, was it the same type of failure or failures? What are the size, scope, nature, and significance of the organization's failures? And in the case of an organization that operates more than one hospital facility, the number, size, and significance of the facilities that have failed to meet the 501R requirements relative to those that have complied with the requirements is taken into consideration. What is the reason for the failures? Did the organization have, prior to the failures, established practices or procedures, formal or informal, reasonably designed to promote and facilitate overall compliance with the Section 501R requirements? Continuing on, were the practices or procedures routinely followed, and did the failure or failures occur through an oversight or mistake in applying them? Did the organization implement safeguards that are reasonably calculated to prevent similar failures from occurring in the future? Did the organization correct the failures as promptly after discovery as is reasonable, given the nature of the failures? And finally, did the organization implement safeguards and correct failures before the commissioners discovered them? Even though the prescribed consequence of a 501R failure is revocation, the IRS might not pursue revocation if there are mitigating facts and circumstances present in any given situation. These facts and circumstances include, but are not limited to, the considerations I just went over. Geoff and I have covered quite a bit of material today. Geoff, can you walk us through a review of what we've discussed?
Certainly. We have indeed covered a lot of material in a short amount of time, so let's absolutely do a review of what we've discussed so far. The Patient Protection and Affordable Care Act enacted Section 501R on March 23, 2010. In order to maintain or qualify for tax-exempt status as an organization described under Section 501c3, Section 501R imposes 4 additional requirements on charitable hospital organizations. In addition to meeting the general requirements of Section 501c3 and Revenue Ruling 69-545, a hospital organization must now conduct a CHNA at least once every 3 years. It must also subsequently adopt an implementation strategy as described under Section 501R3. Under Section 501R4, a hospital organization must adopt both a written financial assistance policy and an emergency medical care policy. Cheryl?
In addition, a hospital organization must limit amounts charged for emergency or other medically necessary care that they provide to individuals who are eligible under the organization's FAP. Finally, a hospital organization must refrain from engaging in extraordinary collection actions until after making reasonable efforts to determine if the individual is eligible for assistance under the organization's financial assistance policy. Geoff?
It's also important, again, to keep in mind the effective dates for the statutory requirements of Section 501R. The CHNA requirements described in Section 501R3 apply to taxable years that begin after March 23, 2012, and the other 3 Section 501R requirements apply to taxable years that begin after March 23, 2010, the date of enactment. Final regulations under Section 501R were published on December 29, 2014, and those apply to taxable years beginning after December 29, 2015. Cheryl?
And just to review failures to meet any of these requirements and the consequences, failure to meet any of the requirements may result in correction and or disclosure of any discovered failures and providing the appropriate level of disclosure on Form 990, imposition of a $50,000 excise tax for each hospital facility within the hospital organization that fails to perform a timely CHNA, and subsequently adopt an implementation strategy. Imposition of a tax on each non-compliant hospital facility's income in a multi-facility hospital organization, or revocation of tax-exempt status as an organization described in Section 501c3, which may affect the tax-exempt status of any bond issue for the organization by a state or local government. All facts and circumstances are considered.
Thank you, Cheryl. This concludes our presentation for today. There is information on the IRS website at the link that is posted on this slide. As additional guidance is published, this information will be updated accordingly. And as we've mentioned at the beginning of this presentation and again partway through, we plan to conduct additional sessions on Section 501R. Each session will cover one of the 4 additional requirements that hospital organizations exempt under 501c3 must comply with, including the CHNA requirements, the financial assistance and emergency medical care policy requirements, the limitation on charges requirements, and billing and collection requirements. Be sure to check EO Update for the dates and times of these future presentations. If you don't currently subscribe to our electronic newsletter, please go to our website, irs.gov/EO, and click on the link titled Free E-Newsletter. It's on the left-hand side of the page. It's easy to subscribe to, and it will provide you with the latest information on exempt organizations, including future presentations. So, again, thank you for joining us, and on behalf of Cheryl, we hope to see you back here for our next series. Thank you very much.